Pops up, we'll just admit them.
Yep,
Okay.
we'll just submit them there.
Okay,
All right,
all right. Are we good?
should be good. So we have Lee and, oh,
Okay, then we're recording, so we're all set.
did you ever set the auto record? Yep, it's recording.
All right. Awesome. Okay, off we go. Well, thank you all for coming or for Zooming in. I am Sue Burnett with Monarch Financial Advisors, and I've partnered with Remax Preferred Group just to offer some financial advice, financial help, anything that you guys might need to put more dollars into your pockets and less into the IRS's or less into wherever. So with that, I know what I don't know, and I also know that I don't know the tax code. So today we are going to be talking to Matt Ackerman from Ackerman CPA. So he is going to answer a whole bunch of questions that we've come up with. But if you have questions, those of you in the room, just let us know if you have questions. We do have a microphone here. So because this is being recorded, we want to make sure that, and I'm just going to lean forward and admit different people to the room. But if people are on Zoom, if you have any questions, just type them in the chat box. I'm hoping that it'll pop up with the chat. So without any further ado, welcome.
Thank you. Thanks for having me.
So just some initial questions, since they know about me and they don't know about you necessarily. Just tell us a little bit about yourself and about Ackerman CPA.
Okay. I grew up in Wisconsin, and I'm a Badger. Went to the University of Wisconsin, graduated in '94, got my CPA license.
OH.
Yeah. Was licensed in '97, moved to Cincinnati in 2005. Didn't know what I was going to think about Cincy, but I've really fallen in love with it. And I think I'll always live here. I do have family still in Wisconsin, so I go back 3 or 4 times a year, and do miss the winters. It can get cold here, but we don't have enough snow. So that's what I miss. Ackerman CPA, we have 3 full-time employees and 1 part-time person. We have businesses that typically have a max of $2 million of gross revenue, up to 20 employees. We work with a lot of realtors, a lot of entrepreneurs, small businesses, and also do personal taxes as well. So a lot of tax planning, a lot of corporate structure, and our goal is to provide value to our clients, so that they feel like they're getting a good value for the service.
Okay.
Yeah.
Good. So you work with a bunch of people in the real estate industry.
We do, yeah.
Okay, good. So if, there's a lot of people that are 1099, and so they say, oh, I'm a Schedule C filer. I know I can deduct my mileage, why should I have a CPA help me with my taxes? I've always done my own taxes. It's always been really easy. So why would they hire a CPA to help them?
Well, similar to what we were talking about before the presentation started, a lot of people don't know what they don't know. And tax law changes every year. A lot of things that you can do to reduce your tax liability, you want to do before you reach the end of the year. Some things you can do after the end of the year, before you file your taxes. But it could be something as simple as working with your CPA to have a discussion with your financial advisor to figure out how much you want to put into a retirement plan. It could be, should you take actual versus vehicle expenses versus mileage expenses. These are things I'm sure a lot of you have heard before, but having those discussions proactively as opposed to after the fact is where we can come in and provide a lot of value in terms of tax planning.
All right, awesome. And just a general question, is a write-off the same as a deduction?
Well, I think those words are used interchangeably quite a bit. So you have expenses that you incur in your business, and some things are deductible and some things aren't. So that's where you want to have that discussion with your CPA or whoever your financial consultant is. I mean, if you can do your taxes on your own, that's great. But if we can come and help you determine what those items might be that you're not deducting, whether it's something as simple as a home office deduction, and should you take the simplified version, or do you want to take your actual expenses and depreciate your house take utilities and mortgage interest and things like that. So I'm kind of giving you a long-winded answer to that, but going back to the initial question, people use those interchangeably, but it depends on what it is and whether or not it can be used to reduce your taxes.
Okay, good. Well, those are all the initial questions. Now we're going to get a little technical. And we
Okay.
are focusing on questions that, 1099 employees might have. So we're not going to talk about, 50 people businesses, because that's not appropriate in this setting. So we're
Right.
really going to try to focus on the questions that you guys would have. So as far as setting up my business, so I hear that, oh, I'm a Schedule C filer. And then CPAs will say, well, maybe you don't want to be a Schedule C filer. Maybe you want to be an LLC, or maybe you want to be an S Corp. At a really high level, can you say what the difference is and maybe when you should flip from one to the other?
Sure. So for any audience participation here, if you've heard this, just give me a nod or raise your hand. So if you're filing as a Schedule C person, and you could have an LLC at that point, you could have an employer identification number and still have that be a single member entity, and you're filing your business on a Schedule C. If you decide you want to file as an S corporation, the big difference is whether or not you are paying payroll tax, Social Security and Medicare tax. So a threshold could be as low as $30,000. Maybe it's time in terms of net income, not gross, but net. And that at that point, do you want to consider whether or not you want to ask the IRS to have your LLC taxed as an S corporation? And that's where you can minimize some of that payroll tax. So that's the biggest difference from a high level view.
Okay, so if I had net income of $100,000, like how much would I save if I W-2'd myself like half of that, or $30,000? I mean,
Sure.
is it substantial?
The example that I use always, and again, this is in a vacuum, is to say, right, here's my net income. It's $100,000. If I am filing on a Schedule C, then I'm paying roughly $15,000 in payroll tax. If I'm filing as an S corporation and I'm giving myself a W-2 because I'm an employee of my S corp, then you're saving, and if you pay yourself $50,000, you're saving half of that. So you're saving $7,500. There are some other pieces that go into that in terms of how much can you contribute to a retirement plan? How does it affect your qualified business income deduction? We don't want to get into the weeds too much, but again, on a high level view, that's the amount you'd save in that example. You'd save $7,500.
Wow, okay, good. And if you're an S Corp or a C Corp, do you have to put yourself on payroll? Do you have to W-2 yourself? Or could I just say, oh, I'm going to have a zero W-2 and then I save 15,000, not 7,500?
It's a good question. And an example would be where I've seen it in the past where people set themselves up as an S Corp and have the IRS tax their LLC as an S Corp. They have not given themselves a W-2 and they get by with it. Now, I've also seen it where someone then gets an audit and they have to go and pay back taxes on a portion of that because the IRS can determine how much of that net income really should have been payroll and how much should be taxed with that payroll tax, that's Social Security and Medicare. One example, the IRS only went back 2 years and the person didn't pay, like let's say it's a 10-year window where they didn't pay themselves at all as an S Corp. So they skated by without having to pay any payroll tax on 8 years. I wouldn't recommend that. If line 7 on your 1120S, which is officer compensation, is 0, that could definitely be a red flag because the IRS is now hiring more people. S Corps are a focus for them. People have avoided paying payroll tax for a number of years through S Corps. So I recommend definitely having a number in there. So if you're filing as an S Corp, you should definitely pay yourself something.
Okay.
Now, determining what that amount is, that's another matter.
Okay, no, fair enough. So as far as payroll goes, should I put my kids on payroll? I hear that it's, really beneficial, even if they're only 12 and 14, if I give them a couple $1,000s a year. I mean, what good does that do?
You can put your kids on payroll. If your child is 2, I wouldn't recommend putting them on payroll. But if they can do things around the office, if they can shred documents, if they can clean the office, different things like that, they won't pay any federal income tax up to the individual standard deduction. Now, depending on how you're incorporated, there may be payroll tax you have to pay on that. But there are some workarounds there too. But the whole idea is they can actually do some work. You can use it as a write-off, and why not take that and use it to your advantage?
Right. Okay.
So, sorry.
No, go ahead. Yeah. And if anybody has any questions, you guys on Zoom too. just
Okay.
Type it in the chat and we're happy to answer them.
Okay, so you say no age 2, but does it have an age limit on it, on the kids to put on a payroll,
A maximum age?
or the minimum age?
Well,
You said not 2, but 18 is
Yeah.
probably good. So is there
is the question, is there a minimum or a maximum?
Minimum wage, minimum
Minimum
age.
age?
Yeah.
I think you'd have to look at that in terms of, what's reasonable. And the IRS always, their answer to everything, even though there are tax cases and court or cases that have gone before tax courts, I would say you still have to or hang your hat on something that would be reasonable. So if the child is 9 years old and can do some of these tasks, and you can reasonably say, here's the amount of time it took, and here's what you'd pay somebody in an arm's length transaction, somebody that you don't know to do that work,
Mhm.
then that would be reasonable.
Okay.
Yeah.
All right.
I suppose it would depend on what it is, but yeah, I mean, if they're in and helping shred things, helping you staple things, helping, you're printing things off at the printer and they're putting them in folders. I mean,
Right.
that could be something but I think you would just need to prove that if they come back and say, all right, Vishnu, you put your 5-year-old on payroll, but that's right. Put him to work. No, that was there you go. No, that's good. And then there's one of the questions was, I've heard I can write off casual labor. So, like it just kind of ad hoc people that come in, and under what circumstances can you do that?
So if it's a legitimate business expense, then yes, you can write it off. So an example would be you have someone come in and clean the office, let's say, or you have, let's say you're hiring someone to put out signs for you and they're not your employee, but maybe if you have them work and you're paying them more than $600 a year, then you give them a 1099. So yes, you can hire people to do work and you can write that off. Again, you have to look at what is an expense that would be deductible for the business. And then that's one piece. And then the other piece is, well, how do you follow it up and either give them a 1099 or what have you. So, yeah.
Okay, good. All right, now we're going to talk about deductions because nobody wants to pay more than we need to, right? I mean, we all agree on that one. So what are the most common deductions or things to write off that people generally don't know about? I mean, you were talking about, mileage, and I'm sure people, all you guys, you live and die by your cell phones. So of course you're writing off cell phone things. And there's some things that I'm sure are no brainers to people, but what are maybe we don't want to give away all the secrets, but what are maybe
Sure.
the top 3 things that you see, especially with your realtor real estate clients that are, boy, nobody knows about this. And this is one of the biggest things.
I think one thing that people don't think about is percentages of phone bills and internet bills, especially during times of COVID, people working at home a lot. So any of those expenses that you're picking up that would normally be something either covered by the office, but now you have to incur that and it's not being reimbursed by an employer, those are legitimate expenses. Health insurance. So if you're self-employed and you're paying this health insurance, that's also deductible. It's not deductible in a Schedule C, but it's still deductible on the tax return. And then if you're taxed as an S corp, there are different ways to report that as well. So if you're more than a 2% shareholder of an S corp, and now I'm probably getting to the weeds too much, but then you have to have it show up on your W-2 in box 1. So those types of things I think are important. But all the little things like LinkedIn, Google, if you have a Gmail account. You have to think of all those things that you would be paying, and make sure you account for those. So I think the biggest thing that I see is that people use different credit cards. They don't have a separate checking account and business credit cards set up. So when it comes time to the end of the year, if you're not actually gathering all those things and tracking them throughout the year, things get lost through the cracks. So that means it's not just one type of thing, it's all different types of expenses. And then meals too. I mean, if you're meeting with someone, make sure you document who it is, and take advantage of that deduction, right?
Because that's fully deductible now, right?
It is.
Okay. And one question came through. So they just renovated their home office with paint and decor. Is any of that deductible?
Yes. So and I'll speak to it as though it's someone filing on a Schedule C. But yeah, you can deduct those expenses that are specific to the office. So again, if you are taking a home office deduction and you're doing it with the standard method, you're taking part of your mortgage interest, part of your property tax, part of your utilities. If you have a roof repair, let's say, for the whole house, or let's say not a whole house roof repair, but a portion that you would write off as an expense for the year. But then anything specific to the office itself, whether it's paint, decor, an outlet that you have to put in, those things are deductible too.
All right, good.
I had a question. Like with the, sorry, I have a mask. With the phone, I know when I was just transferring I just got a new phone in December, and I know one of the things they had asked me, because they're like, oh, you're a real estate agent, you can write this off, but then they had asked me for the tax ID, which is that where the LLC, you would get that with the LLC or the S Corp.
Who would you say they?
It was Verizon.
They were?
Yeah, they had asked, they said, oh, what do you have? And I was like, well, I don't know about that. So we'll just, go on. But they'd said once, and I told them, I said, I was looking into getting my LLC. And they said, well, once you get that, come back. And then they would switch that to a business account. So do you have to have I guess my question is do you, for like the phone expenses and things, do you need to have an LLC or an S Corp? And then I know you said that the C, because this will be my first year actually filing as an agent. So this year will be very new to me. So
okay.
That makes sense. No question.
Yeah. So you don't have to have an LLC established or an employer identification number. If that's, you purchase the phone, and I'm assuming you use it for work and for personal use. So, and let's say the phone's $1,000. And if you are using it 80% of the time, and depending on how you come up with that, whether it's number of uses, you can look at your record and say, here's how many minutes that I've used for work versus minutes for personal. And people are very conservative, or they're very aggressive in terms of how they write that off. So some people write off the whole phone regardless of personal use, and their argument is that, well, I have to have it anyway. And really the majority is business use. I think a more conservative route would be, okay, it's 80% business, I'm writing off 80%. Same thing with internet, but you don't have to have the LLC or the EIN, and you don't have to have any documentation that's coming to a social security number or and the EIN. Just make sure you keep the receipt.
Okay.
Yeah.
And then my next is, I know I've heard that for like clothing expenses, hair, nails, any type of like expense, is that something that could possibly be written off or deducted?
Unless it's something that you need for a uniform, then really it's not deductible. Now people do everything. Right. But I mean, people do things all across the board, and as long as you can make an argument for it,
Okay.
then it's possible that it could just be passed over and say yes. But I would advise a more conservative approach to that
Okay.
and saying yes. So if you're a nurse and you have to buy your own scrubs, then I think that's something that's different. Yeah.
Okay, so I misunderstood the question. So if they were like, if Karen were to paint and redo her whole office in here, but she rents this office, would what she did in here be deductible to her? Or no, because this is Remax preferred group space?
I think I'd want to look at how that lease is written up. And you know what I mean? In terms of what can be done and who's responsible for what, and then I would give an answer on it. But let's say the lease said that Remax is not responsible for maintaining the office space, hypothetically, and the person is meeting with clients in the office, then I would say, yeah, that's definitely a write-off.
Okay. All right, good. Well, next question, can I deduct my healthcare insurance? And so you already tackled that one.
Yeah,
Okay, should I have my auto insurance include my broker as an also insured? So if you have your car insurance, what do you think about that?
I think you should reach out to your insurance agent and make sure you have that discussion. So for example, we have an employee in the office who goes and runs some errands for us. Let's say they go to the bank or they go to the post office because we send a lot of things certified mail. We have them on our insurance policy to make sure that if something were to happen, that they were covered and we didn't, get sued. Nobody wants that. So I think anytime you're doing any work, we're using a personal vehicle that's for business use, you should definitely have that discussion with your broker. And I'll kind of, yes.
Do you want to give him the microphone?
Yes,
Because we want
please.
to make sure that everybody on Zoom is
Yeah.
hearing this too.
Just so that the agents know, part of their independent contractors agreement with us and with Remax, you have to have us as an also insured on your automobile policy, and it has to have $1 million coverage. So, thank you.
Yes, and I think that's important to
Yeah,
know,
Depends on their contracts, right?
Yeah.
But-
to know who the brokers that you're dealing with.
Wait a minute.
Yeah.
And there's no additional cost for that. Just want to make sure. Yeah, everyone understands that.
Also-
Yeah, right. Yeah,
Okay, good.
that'll be the next question.
Thank you.
Right. So who's paying for that? No one, actually. So, no, that's good to know. So anybody that's on here, anybody that's in the room. Gotta put,
So,
these guys on.
clarification. So car insurance, will that be put under deductible or not? Deductions or not?
So that depends if you're taking actual expenses versus mileage. And that's something that you can look at every year. So if you're using, if you have car insurance, you have a loan where you have interest expense, you have repairs, you have your gas, you're depreciating the vehicle. That's the actual expenses for the vehicle versus mileage. And the mileage rate every year takes it all into account when the IRS releases that for each year.
Yeah, the mileage rate is what, 62 cents? It's like over 60 cents a mile.
It was 56
Okay.
this last year. I think it's 58 and a half maybe this next year.
I bought a vehicle this year,
Yeah.
paid it cash outright. Is that something that I could deduct as a whole, or is there just ways to go, just do portions of that?
Good question. So with purchasing a vehicle, you can, in that year, whether it's new, brand new, or just new to you, you can deduct a large portion of that. And there's accelerated depreciation and bonus depreciation. So if you had a huge year and you bought this new vehicle and you wanted to time the expenses with that increased income, then yes, there are opportunities to do that. If you think your years are going to be pretty consistent, then, because I've had this conversation a lot with people, in the end, 99% of the time, it's easier just to take the mileage. Now, if you have a vehicle that's more expensive, then we have to consider some of that, I think, a little bit more closely and determine which route is better to go. But it's something that you can look at when you're doing your taxes, determine which is better for you.
Okay, good. And Chris and Miles, you may want to send out an email because some people they didn't know that you guys should be on there. And so so you may want to give them some specifics as to how they should add you to their coverage, just to make sure that they're all good to go. So, all right.
And someone verified the cents,
Yes.
so
yeah.
it is 58 and a half for this year.
58 and a half. So So I just do mileage on my car because I have an old car. But if I went out and got a $100,000 car and I had a whiz bang year and I had all, or I had a real old clunker and I had a lot of expenses to dump into the car, it may make more sense to deduct all the money that I'm putting into it and the actual gas that I'm paying versus just saying, I went 1,000 miles this year. I'm paying myself back, so it depends on the car that you have, I think, and how much you're actually putting into it versus just cents per hour or cents per mile.
Mhm.
All right, good. Okay, so general questions for you. We made it through employee payroll. We've made it through deductions. So how much money should I set aside from each commission for tax planning purposes? I.e., how much do you cost?
Good question.
And if I had a nickel for every time you said it depends on this Zoom, it's probably as often as I do, then
Yes.
I'm retiring after today.
Yeah, I mean, it does depend. It depends on the complexity of the clients, and it depends on the complexity of the tax return. So the tax return could be, yes, you have this business that you're in, but what else do you have going on, right? Is there a spouse you have that also has a business? Is it going to be a separate tax return versus your 1040? And then the complexity of the client is really, all right, well, how often do we have to go back and forth and ask for information? Or does the information change? Or is there a lot of education that we're doing? So we do throw out a price and we have a rate sheet that we can share with everybody. But then we have that first meeting, we look at the prior 3-year tax returns, have those initial discussions, and then we come up with a rate that we're both comfortable with, whether it's a tax return, tax planning, or a combination thereof.
Okay, but the initial consultation with
Oh.
you.
Initial is we'll get together and we'll talk, and it's free. Yeah. So I'm happy to give away as much information as I can, because for me, I know in the end that people need help, and we're happy to offer the help.
Can I speak to that?
Yeah.
Sure.
To everybody that's listening, I'm 67 years old, and I have used a CPA to do my taxes since I was 21. And believe you me, it is worth it. You sleep better at night. You put a few extra dollars in your pocket, in spite of the fact that you have to pay that person. But it's kind of like a for sale by owner. Okay, do what you do best, and pay somebody to do what they do best. It's worth it. It is really, really worth it.
Thank you. Matt, do you just do taxes or your business, or would you help set like goals and do business planning and things like that?
We do more of that than I never thought we would do. So we do, because we have the expertise working with small businesses, that we do a lot of education. And that's the part that's fun too, because we're helping somebody learn what to do, what not to do. And the goal really in the end is for them to keep more money in their own pocket. So if we can do that, then we feel like we've been successful. There are always life changes that happen. People get married, divorced, have kids, there's a death in the family, whatever it is. So as long as we are developing a good relationship, providing value, then it all kind of comes back around. And I kind of forgot what the question was. What was it again?
Well, do you do goals and business
Yeah.
planning?
Yeah,
as
so
well?
we-
I guess that would be yes.
Yeah, we do all that.
Oh my gosh. And just one question, just to follow up on what Miles said, and this is
Mhm.
kind of, it's the same thing I think that what happens with life insurance. Nobody thinks you need it until somebody passes away, and then you think, shoot. And maybe nobody thinks they need a CPA until they get a letter from the IRS that says,
Right.
hey, your calculations are all wrong. You owe us an additional $40,000. So, can you talk a little bit, because you and we have an article coming out in Loveland Lifestyle next month as well, just talking about individual and business taxes and different case studies, things like that. Because Matt and I have worked together on a lot of clients, but
Mhm.
can you talk a little bit about, kind of the kind of backdoor that you as a CPA have into the IRS and some of so it's sleeping at night, but it's also when you get the letter from the IRS, you can hand it to Matt and say, here, you take care of this.
So I want to address the backdoor into the IRS first. So we pay for the service it's called NQ, and we pay $100 a month basically for it. And it kind of cuts us in line so that people aren't waiting on hold until minute 41, and all of a sudden you get cut off. That happens a lot. And so we're on hold with the IRS, not every day, but quite frequently. So one example I'll give you is you're familiar with 1099-Ss. So if someone sells a property and you get a 1099-S at the end of that transaction, or not the end of the transaction, but end of the year, you're supposed to report that sale on your tax return. And some people don't know what that form is. They don't realize that they're even supposed to be looking for it. So a prime example would be somebody selling a house. There wasn't a reportable, or they didn't report it on their tax return. They get a letter back from the IRS saying you owe $170,000 plus a 20% addition on top of that for this. I'll use the term gross negligence. That's not the right terminology, and so they owed almost $200,000, and it was easy enough for us just to say, well, what was it all about? We called the IRS, realized it didn't report the transaction, reported it, and then it got wiped away. But when people get those letters, it's a scary letter to get unless you're used to dealing with it. So we got a letter this last, and it was maybe June, for 2018 tax return, and just got a letter back in the mail last week saying that $200,000 tax burden was wiped away to zero. It's not anything that we did, great. We're just used to dealing with it, but it's an easy win for us to help our clients feel better.
Mhm.
Yeah.
Good. Okay, so let's see. So we actually had someone say, yes, a CPA is worth it. Many years ago, we took advice from the IRS that was wrong, and they were audited. They decided to be retroactive, hired a CPA, refiled for 10 years. It cost them a bunch, but the IRS's response was, the IRS is not responsible for the advice we give you. So be a little careful when you get the letters from the IRS, because you had another client that the business changed names in the middle of the year, and
Yeah.
they got 2 1099s for $45,000 just because the business name had changed. So the IRS was saying, well, no, you don't owe taxes on 45, you owe taxes on 90, because both got sent to the IRS. I mean, the IRS is a garbage in, garbage out, right? So it was easy enough to fix, but if you can be on the phone with the IRS for a hold time of 5 minutes, you guys don't have an hour and a half to sit on hold with the IRS to tell them, no, my business changed names.
Right.
So, so it helps you sleep at night, because, you can also save them money, but you can also, when you get those scary letters, it's somebody that you got the pro in your corner to help you out.
Right. Yeah. And you can always address them if you want to yourself. Know that too. Just make sure you set aside some time and call at 7 in the morning, right when they open.
Yeah. Yeah. I think if it's a small penalty, most people would just pay it without really looking, where it might not be right at all.
Right. And that's relative to everybody. So somebody
Right.
might pay a $3,000 bill because they just want it to go away. Well, maybe we can save you some money and have it wiped away. We're going to send you a bill for our time, but you're going to save, more than $3,000 had you paid that.
Right. Good. Thank you, Zoom guys, for your questions. Any other questions in here for Matt? We'll leave our cards up here. Like I said, I know what I know, but I know what I don't know. So I know a whole bunch of ERISA code and retirement plan code, and he knows all the tax code. So we work together on the retirement planning and things like that.
I'm going to add one more thing.
Sure.
So, when you come to a CPA, you're coming to one person who knows their world, right? You want to have your CPA deal with other people like an insurance broker, right? You want to have that CPA deal with your estate planner. You want to have that CPA also have a good relationship with your financial advisor. So those things I think are really important. And Sue's been great to work with.
Thanks.
And yeah.
Thank you.
I have questions. So let's say making like 700,000 a year had a deduction roughly about 250,000. Let's say I wanted to work with you and wanted to get started going. What is my out-of-pocket cost to prepare all this, here and there? And what is my estimated tax to be paid to the IRS?
What is your out-of-pocket cost for the tax preparation?
Yeah.
And then what is your estimated tax to be paid to the IRS? Well, so you have the business of 700, that's gross. You have 250,000 of deductions. And is this as an S corp? So you have 450 left. You have to look at any estimated taxes you would have paid. You have to look at any other tax situations. So there are all these different moving parts. Are you itemizing or taking a standard deduction? How much does the 250 include what you're paying yourself for payroll? Does the 250 include what you're putting into a retirement plan? So we have to look at that piece too. And so depending on your retirement plan, if you are, let's say you paid yourself $100,000 and you had a SEP, so you're putting in $25,000 into the SEP. So there's an additional deduction. If you have a 401k and profit sharing, so then you're putting money into the retirement through the business yet, but you also have a personal write-off. Do you have a health savings account? All these different pieces that we have to look at. So, then you have your moving target in terms of tax brackets. So every dollar over a certain amount is taxed at a higher rate. So we have to look at the whole picture
Yeah.
and determine what that would be.
And even if you didn't have a SEP, or even if you didn't have these retirement plans, and all through January, we're going to start getting all the forms in saying, oh my God, I can't believe I made that much last year. It's not too late to do things for 2021 on
Right.
any scale. I mean, you can't do 401k contributions. That's the one thing that you can't do because W-2s were issued. But as far as SEPs go, as far as big retirement plans go, you have until your tax filing date with extensions to put that in for 2021. So you can also work, if everybody had a great big year, if you had a great big year last year and you think, oh my goodness, I need a bigger deduction, it's not too late to do that for 2021. We would just structure the plan to not only work for 2021, but to work going forward as well. Because some plans are a little more rigid with what you have to put in than others, and some are really flexible. So we would just figure out, again, how much it would take to get you down to the next tax bracket and to minimize your taxes this year while not setting you up for great big contributions in the future. But yeah, you can still do a lot of stuff for 2021.
So cost-wise, what is your preparation cost for the plans?
So we hand out a rate sheet that says $700 for an individual return, $850 for a business return. Then they go up from there, or they could go down because we might have somebody who just has a W-2. They don't want to go to H&R Block. They don't want to file it online. So we would just charge them whatever our time and materials are, because those returns are very easy for us, but we have our overhead just like you guys do for the space, right? Or for your offices. So yeah, it's hard for us to give a quote without looking at prior returns and having that initial meeting.
But that's a good ballpark. And I think
Yeah.
the first year, as well, like if you've been an S corp for a couple of years, you already have your balance sheet set up and you already have your W-2s set up, like
Right.
that first year. I'm doing this year, I'm going to an S corp, and there's a lot of upfront stuff you have to do to get it set up. So I think it depends on how much, those are good ballparks, but if, you were talking about if you send things electronically, that also reduces costs because they need documentation for all the tax returns that they do. So if they're going to if you mail something to them or hand them something, they're going to have to spend time scanning. And maybe it's not Matt's billing rate scanning,
Right.
maybe it's his part-time person, but it's still additional work. And he'd be able to say, you know what, if you want minimum costs, you
Right.
could send things electronically, send them all at once, similar, I think, to when you're trying to close a deal and I send you one of my W-2s and my husband sends you another W-2 and they send this. And, when it's all piecemeal, it gets a little crazy.
Right.
So,
And we explain all of that in a letter we send out that goes out before the engagement letters. So we're trying to we want everyone to be in the digital world so that we can be down in Florida working from there or working wherever, right? And so, and that we can do that because the technology's there.
Right.
So it's our job to train our clients.
Right.
I do have one realtor who started sending me individual documents this week. And then we sent an email back saying, hey, why don't you just hold off, wait till you have them all together and you can share them through the portal system that we have. So,
Cool.
Yeah.
Do you also do individual tax like someone who's W2 working in a different company?
yes, yeah.
Okay. What is your cost for, like, let's say they didn't make much money, like, let's say 50,000 a year.
I throw out the same rate sheet and then look at those returns again from the prior year. Because it's hard to know, again, how complex the return is without seeing prior year and talking about the current year. And then again, going back to the complexity of the client. You know, you all have clients who are, some are easier, some are a little more difficult. So, you know, the more time it takes, the more we're going to charge. Yeah.
But in general, the
Yeah.
700 for the
Yeah.
individual, the W-2, and then the, what was it, 850?
Yeah.
Okay, for the business. And that's the starting point.
In some ways, the business returns are easier than the personal returns. But again, it all depends on, you know, the hand holding and the education and piece like that, because you want to make sure that the client feels good about what they're getting and understand the whole process too.
What would be the difference between like you guys and just a regular H&R Block or a tax preparer?
Yeah. So I've gotten that question a lot. And, you know, the difference is the easiest explanation is you're going to H&R Block and you're going there after the fact. Everything's done historically. So you're really not going to make any alternative decisions affecting your tax return, even if you still have the opportunity to, because they're typically just prepping the tax return with the documents that they have. Now, I don't work for them, so I can't speak for them. I'm not sure how complex or what advanced their services are, but I'd like to think that we provide a deeper service and think about things proactively so that it's not just based on historical numbers.
Sort of like Remax does against the competition.
Exactly.
There you go.
I was
There
gonna
you go.
say that too, yeah.
This is a good one, Mark.
Or even better, Remax preferred group.
There you go. But it's something as simple as, you know, my husband and I have filed married joint, you know, forever. And you were talking about, you know, one client of yours that it actually made sense to do married filing separately because of COVID and there was some unemployment involved and they actually paid less filing separately. But I think an H&R Block would say, oh, you filed this way last year, you're going to file this way. And they might not do these comparisons for you too.
Right.
So Jamie, you have a
So I've been telling a select few this, so let's get it from the mouth. So
Uh-oh.
how much easier does it make life for an accountant when you hand them the keys to the castle with like QuickBooks reports? Because I run everything through that. You know, I can run the report off the end of the year and say, here you go, here's the Excel file, or just send it over to you. It's all right there.
Can you repeat that? I'm hoping that, you know.
Oh, sorry,
don't know if
I
you
forgot
guys
to go back
can
to
hear
that.
it, but I just want to make
You
sure.
sure?
Probably picked it up.
All right.
Oh,
All right.
okay. Yeah.
It's a complex answer.
Okay, so the question was.
So the question was, how much easier is it when you get the keys to the castle? It's a QuickBooks, and we have access to QuickBooks online. You give us the access, we can print up the P&L. Boom, we have it all set to go for the tax return. What I see a lot is that people, when we look at their profit and loss statement, they don't look at the balance sheet. And so I go to the balance sheet and I look to see if all the accounts are reconciled. And if I go to the bank rec and I see all these things that are uncleared from the beginning of the year, this is the fun part for me, because I always tell this story. So your balance sheet is like the foundation of your house. And if the foundation isn't solid, the rest of it could be a little wobbly. So if the balance sheet isn't good, then the profit and loss could be wrong. So that's why I say, all right, the answer is yes, it's a lot easier, but we have to delve a little bit deeper and make sure that that balance sheet is good. And if it is good, then the next step is, yes, it's easier numbers wise, but that's what we expect from all of our clients, whether you give us an Excel spreadsheet or it comes in QuickBooks. So if we have to do bookkeeping at the end of the year, then, you know, then we charge for that too. But hopefully we're helping educate where, okay, now next year the person is doing it themselves, right? And then there's also tax planning. So if everyone keeps their numbers up to date throughout the year, you know, well, okay, how much should I pay myself as an S corp? Are there any other deductions that I can pay for now that maybe I would have let roll into next year? So I know I give you a long-winded answer, but that's kind of how we see it from our side.
I run the whole suite, including mileage.
Do you?
It's right on your.
Yeah, yeah. I mean, then it makes it
Makes
easier,
sense.
a lot easier. Yeah. That's what we want everybody to do.
Swipe right, swipe. left.
Yeah. You do better than I do.
Swipe right.
Yeah.
swipe left. Oh my gosh. Yeah, I mean, the more organization, the better. You
Yeah.
know, I think that's whether it's in QuickBooks or, you know, Excel or what, but yeah, swipe right.
Well, he's right though, because it's either personal or it's business.
It is.
Yeah,
Ah.
yeah. So that's how you
Yeah,
do
I
that.
don't
Yeah.
have QuickBooks and I'm like,
As soon as you
are
get
we
something
talking about
else,
taxes?
is that business? Is that
Yep.
personal?
Oh
Yeah.
my gosh.
Yeah.
I mean, it's-
Perfect.
Yeah. Perfect client right there.
That's right. That's
So you
right.
don't gotta
Oh my
bring a
God.
shoebox full of receipts. to you.
Yeah, that's right.
You know, we get that too, and we'll do it as long as there's an understanding that you know, there's going to be a charge for it, and we'd rather have that shoebox, at least half of it, midway through the year. We don't want to get it all like January 31st, because then we're getting into a crunch, and then we're looking at extensions maybe.
Okay.
QuickBooks, you can take pictures of the receipts.
There you go.
It's true. It's true.
It'll convert it.
How important is it to keep all those paper receipts? Or if you put it on, like I put everything on my business credit card and I keep track of, oh, I went to Ramsey's in Loveland with so-and-so on this date. I mean, do I actually need that paper receipt from Ramsey's?
You do. You need that receipt. The IRS won't accept the credit card bill as substantiation of the expense. I've seen that before where somebody had a lot of expenses that were legitimate and they didn't allow any of them. And it was just a pattern of behavior where if you act like a business and you keep track of all that stuff, well, then your stories and your facts and circumstances are a little bit more believable. But the fact that this person was so just sloppy in terms of their record keeping, they didn't make their case any easier to sell to the IRS. And like they had a 20% penalty too.
Wow, okay, that's good to know. Because I need to start filling up a shoebox. 'Cause
I don't use the app, and maybe because I'm too old or don't want to change, but I keep all my receipts. I just keep them in a folder.
If you scan like I do for my phone, I just take a picture of the receipt. Does that
Oh,
count
there
as
you
the same
go.
as keeping it?
Yeah.
Okay.
Okay,
Yeah,
Right,
'cause
that
they
I might
print
be
on
able to do.
invisible paper now.
okay,
After 6 months, it disappears.
It's true. It is.
good. Any other questions or people on Zoom? You guys have any other questions, comments? We'll give Karen, well, here we'll put some of our business cards out. You guys might have mine from before, but feel free to grab both of our business cards. But we can also send out our information. If you could just send out, you know, our emails, phone numbers, stuff like that. But this is being recorded, so that's awesome. You can always go back and if you think, God, I can't remember what he said about the receipts, you'll be able to come back and look at it. Good.
Yeah, I saw that one. So mileage can't be tracked with receipts. And it's true. So we take a mileage document that comes right from the IRS website. We have it in Excel. If anybody wants to use it, I recommend that you use that, even like it more than,
QuickBooks converts.
does it convert to that? Yeah. So if you're not using QuickBooks, then yeah.
I swear I don't work for QuickBooks.
So yeah,
You should.
a lot of people in practice don't keep track of mileage very well, but it is something that's important in case that audit ever comes up.
Okay,
I
Good.
got one car right now that I only use for real estate purposes, so.
Yeah.
any mileage that I put on it is just
All business.
all
Yeah.
business.
yeah. Are good. Any other questions? Are we good? Excellent. Zoom people, thank you so much for coming. We appreciate you. Thank you for your comments. And let us know if you need any help. Thanks, guys.
Thank you. Thanks.
Oh, one more thing. One more thing. I'm like Columbo, like when he leaves. Just one more thing. We're gonna plan on, well, I'm gonna plan on doing these quarterly for you, at least twice a year, with any kind of financial topic you can come up with, whether it's more accounting stuff, a more in-depth accounting thing. Maybe we can do something at the end of the year, whether it's talking about, you know, different like disability, long-term care, life insurance stuff. If you want to talk a little bit more about the retirement plans, anything that has to do with a dollar, I'm willing to either come in and talk to it or bring in a subject matter expert because I know what I don't know, which is great. But if you guys have any topics for anything you want to hear about, please let us know because, you know, this is all for you. This is all just helping you guys put more money into your own pocket. So just shoot an email to Karen and we'll come up with another topic for the spring.
Sounds great.
Good.
Thank
Thank
you.
you, guys.
Thank you.
All right.